Stocks are on track for a negative quarter as rising rates and oil prices spook the market. The key question now is, will we get some rebound and traction in Q4? My next guest says follow the flows in ETFs for that answer. Joining me now is Todd Sohn, ETF and technical strategist at Strategas Securities, a Baird company. Todd, welcome. What primarily jumps out to you here?
Hey, Kelly, how are you? I would pay attention to what sentiment forms in, as we head into the fourth quarter here. If you think back to earlier this summer, flows from the equity space really started to run hot as I think most investors thought this rally was for real. That manifested itself into a correction throughout this month, and now you're starting to see flows cool off. Now, the one ingredient I'm looking for is a spike in inverse ETF volume, the ETFs that short the market. That's more of a reflection that sentiment is getting too offsides, too negative. That hasn't quite happened yet during this pullback, so I am looking for that as we start to head into October. That would give me confidence that this dip is finally coming to a conclusion.
Right. So what you're telling me is not a good sign. We want, maximum fear, and people have started to cite that. The CNN has their fear and greed index, and just different things about oversold and bearish. But you're actually saying we haven't quite approached that level yet. There could be some more downside to come.
Yeah, I think we're in the zip code, but we've seen much worse. You think back to about a year ago, early October, the October 12th low in the S&P 500. That was max pessimism. We're on our way there. You've got a whiff of oversold conditions on a technical basis, but I wouldn't mind seeing just a little bit more to really increase our probabilities of having a great rally going forward into the fourth quarter.
How important, and talk to me about treasuries, literally hanging on every word at this point. What do you see in the flows?
Yeah. So long duration treasuries really are, I feel like, ground zero right now of the market. Now, Keep in mind, the TLT is a bond product wrapped in equity-like volatility. I think that's a big understatement missed by investors, that when you're buying long duration bonds, you're getting immense volatility, and you're still seeing money pile into this fund. It's the second. It's seen the second most inflows out of any ETF listed on the U.S. out there. And while you have seen some panic-like volumes over the last few days, which I think is good to get maybe a little bit of a bounce, I think it's a hard competition to go out and buy that volatility versus, say, stepping into a money market fund where you're getting a higher yield, but without any sort of volatility there. So while the TLT drawdown is a record, stomaching that volatility involved and trying to find the low is just extremely challenging for everyone out there.
Real quickly, Todd, we have some breaking news, but you also see people leaving the financials, and I always love to bring it full circle to our first segment where Barry Knapp was concerned about the regional banks. Do you think other investors are as well?
Yeah. I think now I like when you start to see outflows from sectors while they're rising. In this case, you're getting outflows from the financials as they're starting to decline again. I think interest rate pressure is starting to agitate those financial type names again. So you can start to think about it from a contrarian perspective, but not entirely big flush like we saw earlier in this year. So I would at least stay on the sidelines right now if you're looking to allocate to the financials.
That's very interesting. I love getting your pulse. And the ETFs are ground zero. Todd, thanks for your time this afternoon. Appreciate it.